Welcome to week 1 of my weekly NVDA trading series, where I'll be running my double Ferris wheel strategy. That means selling a covered call and a cash secured put on the same stock at the same time every week. In this kickoff video, I'm starting by buying 150 shares of NVIDIA, then selling one call and one put with the same expiration. I've also placed two good till canceled or GTC roll orders, one to roll the call up if NVIDIA rises and one to roll the put down if NVIDIA drops. So I'm ready to move if the price hits my target. Let's walk through the setup and talk about what could happen next. I'm going to buy 150 shares. I'm looking at the option chain for August 8th, which is 1 week from today. I'm selling a covered call with a strike price of 180. And a cash secured put with a strike price of 160. I paid $173.54 times 150 to buy the shares. Do a little quick math to see how much I just spent. For the covered call, I received $129 less a small trading fee. And for the cash secured put, I received $68 less a small trading fee. If you are new to options or want to follow along with your own trades, you can grab my spreadsheet, books, and free resources at SaylorFinancialFundamentals.com. Everything I use is there, no fluff. I'm using 100 shares to cover this call, and I just paid $173.54 for each of those shares. So for the collateral value of the covered call, I'm going to use $17,354. For an annualized rate of return of 38.56%. I'm securing the put with $16,000 for an annualized rate of return on that contract of 21.95%. I'm not sure what this number is for the daily income. There may be a glitch on the spreadsheet that I need to repair, but I'm not going to worry about that right now. I'm going to sum my total expense and income. I spent $26,031 buying 150 shares. I received income for the covered call, and I received income by selling a put. So right now my total out of pocket is $25,835.32, and I have 150 shares. If I divide my total expense by 150, I can see that my out-of-pocket cost per share right now is $172.23. If I do nothing and let these contracts play out, if the share price goes above 180, I'll receive $18,000 in income, and I will still have 50 shares at the end of that trading period. If by August 8th, the share price drops below 160, I may end up being assigned to buy 100 more shares at a cost of $160 a share, which will further lower my adjusted cost per share, and I would end up with 250 shares. If the share price stays between 160 and 180, then everything will expire and I can just do this again next Friday. But in the meantime, I don't want to have to babysit this position. I don't want to have to watch it every day. So I'm going to place two roll orders, and I'm going to leave them in my account as good till canceled orders just in case the stars align and one of them fills when I am not actively monitoring this position. So let's look first at this call. Right now there is $1.18 per share of extrinsic value, which is going to erode over the next week. So I'm going to look at a roll to see if it would be possible to raise my strike price and still get a net credit for the roll. Right now, rolling out from 7 days to 14 days and increasing the strike price by $5 a share would cost me about $3 to $6. But over the next week, as the extrinsic value erodes, and especially if the share price increases, I may be able to roll this out for a net credit. So I'm going to put an order for $75 or 75 cents a share. It is a limit order, meaning that I will only accept a fill that brings in at least 75 cents a share, and I'm setting it as good till canceled. If it fills, I'll receive $73.68. So I have sent the order, and it is sitting right now in my working orders. Now I'm going to place a similar order, but with the cash secured put. Right now this put has extrinsic value of about 70 cents a share. If the share price continues to drop closer to my strike of 160, this extrinsic value is probably going to increase as the likelihood of assignment increases. So just in case the share price continues to decline, I'd like to give myself a chance to roll this and lower my strike price if I can do it for a net credit. So I'm going to click roll. I'm going to set a new strike of 155. If I wanted to roll it right now, I could bring in $21 or $22, but I know that if the share price continues to decline, I can roll this for more income. So I'm going to put a limit here of $125, $1.25 a share. Again, it's a limit order. I will accept this roll if I can receive enough income to justify it. And rather than a day order, I'm setting it as good till canceled. Both of these roll orders represent some optimism on my part. I call them aspirational orders. It is extremely unlikely that they would both fill, but if the share price goes up, it is more likely that this call would fill, and if the share price goes down, it is more likely that the cash secured put order might fill. So I'm just going to leave them there, and I'll check back at the end of next week. If they have not filled for me, then I may change these orders, but I'm just going to leave them sitting there for now. If the cash secured put roll is filled, my new collateral value or collateral requirement for the trade would be $15,500, and a $123.68 income would give me an annualized rate of return of 41.61%. And for the covered call, I'm going to use the collateral value, at least for now, of the adjusted cost per share, which is $172.23, giving me an annualized rate of return, if this is filled, of 22.31%. If the share price increases, I may change this collateral value number to a higher number. It's very easy to choose the collateral value for the cash secured put, but the covered calls are a little trickier. I have to think about how much I paid for the shares, the current value of the shares, and decide which number makes the most sense to use. So let's check back on Friday, August 8th, and we'll see how this trade campaign is progressing. No matter what happens this week, whether the GTC orders fill or not, I'll be back next week to show you exactly how it played out and what I'm setting up next. If you want to follow along with this NVDA campaign or learn more about the strategies I use, make sure you're subscribed and check the links below for my tracking spreadsheet, books, and step-by-step beginner guides. See you next week.